Hi guys, it is Pila here. I just want us to look volatility 75 on a 1 hour chart. I want us to do an analysis based on price action. I want us to do an analysis based on price action. This is what I always talk about when I go live with you guys. This is what I always talk about when I go live with you. I always say whatever you do, you need to go from higher time frame and check the direction of the market, and then you go to smaller time frame. You execute trades that are corresponding with the direction of the market. That's what you do. If you apply pure price action in your chart every day, everything becomes simplified. You don't have to jump in just because of you feel like the market is moving. Number one, I said the other day, people should understand the history of the market. They must understand where the market is coming from before they enter, before they take any decision. The fact that you're looking at this pair, you see that the market is just moving to the upside. Uma ifika laphayana iya-reactor, move to your left-hand side. Your left-hand side will be your key to understand what's going to happen to the right-hand side. So here you can see, what is it we have? A break of structure. Let me mark it as a zone, and then I'm going to extend to the right. These are things that you must do whether you like it or not so that you can become profitable. You understand where the market is coming from. Go back to where go back to where the market is coming from and check what is it that you have that can cause the market to reverse, where you think the market will reverse. You realize that, oh, there's a break of structure there. A break of structure, yeah, okay, it was never tested after it was broken. It means the market's gonna react. Yeah, you check, isn't it that you're looking for entries? As you're gonna be looking for entries, you need to go extra mile and check, okay, fine. If I'll find myself selling there, what will I be selling? Can you see that? You prepare for yourself when you're looking for entries. You don't just decide that today I feel like I have to sell. Today I feel like I have to I have to buy. You approach the market that way, you won't become profitable. But if you analyze and look at the chart and use what they presented you with, you'll see what's going to happen. You look closer here, there's a break of structure. You highlight the break of structure. I want you to understand something. This is your break of structure. It looks like this on the right-hand side. Now I have to remove this one. And then I have to mark it as a zone. Now you see, okay, fine. The market went up. As the market went up, what is it I get? The market turned here. We did not reach for the resistance. And if you look closer, it was a support. It was never tested here as a resistance. It means they must come back and test this break of structure. You look at the market, you be like, oh, flip, okay, I can see the market turned here specific, applying the line chart. The market turned there specific. It means now the market is no longer going up. You enter, you sell, you enjoy, the market goes down. Again, when the market comes back to this resistance here, you won't focus on the above resistance because of this is where the resistance is based on the line chart. Where is this resistance coming from? This resistance is coming from our left-hand side. I once said when you trade support and resistance, don't trade a support and resistance that looks like this. You see, you had a resistance. It was never respected as support here. It was just broken. Then you expect the market to respect the same level as resistance. If you approach the market like this, believe me, the higher the chance that you'll find entries that won't correspond with the direction of the market. Even if the entries will correspond with the direction of the market, what will happen is the market will penetrate your support or your resistance before it moves to your direction. Hence, you can see what they did here. These are things that you're supposed to be preventing, right? The market went through. And now, if you go extra mile to check what else happened here, you'll then realize that, oh, okay, here my trend line was broken. It means that the market is no longer going up. It means the market is no longer going up. What must I do? Let me wait and see. As the market is coming down, let me look for something that I can use to my advantage. I know that the market's supposed to go back to the resistance. Therefore, what must I do? Let me look for entries that will be corresponding with the direction of the market. Let's just say you want to find yourself doing what? You want to find yourself grabbing this movement as the market is going up. What do? Let me erase my chart. You move to this previous trend. Hence, I always say, guys, when the market is going down like this, the only thing that you have is your left-hand side. Your left-hand side is your guide to your right-hand side. You may not understand this now, but if I show you and say your market will respect everything that was left unattended on the left-hand side. Now look at this. As they were going up, they gave us a trend line. They came back for the trend line again. How many touches we have on the trend line? 2 touches. This is 1 hour chart. Besides the 2 touches, apply your line chart. What do you have on your left-hand side? A continuation pattern. Where is the continuation pattern? Here. It moves to the right-hand side. Now you know that, okay, flip. Now we're going to move the market to the upside. Let's go back to the candlesticks. Now you see, I said a continuation pattern consists of 1 or 2 candlesticks. Here, we have a continuation pattern with 2 candlesticks. That means the higher the chance that the market's going to respect what? The continuation pattern on the right-hand side. And on the right-hand side, it shows that our continuation pattern was never tested as what? It was never tested here as the first time. Hence, you can see the market reacted there on the continuation pattern. Now, what's your expectation? Your expectation is that the market continues to the upside. When I say to you, whatever you do, trade according to the direction of the market. Now, the market shows that we are pushing the market up, right? What do you have? Use your line chart, a break of structure. Now you know, oh, okay, there's a resistance here. The resistance was broken, supposed to become what? A support on the right-hand side. It means we are looking for it. We are looking for buy opportunities. We are done. What do? Let the market go up. Wait for the market to come back so that you can buy. Don't create opportunities that are not there. Sorry, this is what I always say, guys. Do not create opportunities that are not there in the market. Instead, use what is presented to you with chart luck. Right now, you notice that this is 1 hour. You have a resistance that was broken. It was never tested. That's your confirmation that you're supposed to be looking for what here. You're supposed to be looking for buying opportunities. What do? You wait. You let the market go up. Don't rush. You rush, you lose because of you look for entries that are pushing the market to the upside, the market will come down. Therefore, avoid taking unnecessary losses. Wait for the market to come back to the break of structure where it will be safer for you to step in and buy. Hope I make sense. Now, what happens here? You notice that, okay, there's a break of structure of mine there. It means, let me adjust the trend line. It means the market will push to the upside. As the market will push to the upside, you move again, you check. Already, I assume by now you know this pattern. The market left a continuation pattern here. A full one start here, it ends there. The market went up. As the market was going up, already if you move to your left-hand side, you realize that, oh, flip, there's a break of structure there. It comes from your far left. And you had your support here, it was broken here. And then the support was respected here. Now, as the market is pushing to the downside towards, let's assume that you think the market is coming for this support. At the same time here, you have a continuation of a trend. This continuation of a trend is pushing the market to the current direction, of which is the upside. We end up doing what? We end up breaking the resistance and continue with the market to the upside. Now, as we are pushing the market to the upside, what do you get? You have traders that are trading support and resistance, right? They will step in there and do what? And enter here and go to 15 minutes. Their stop loss will look like this. The market will go through your stop loss. Not because of you don't know what you are doing, but because of you are not paying attention to your left-hand side. On your left-hand side, you have a what? A support that was not tested. They came for that support and tested as a resistance on the right-hand side. Now, the market is moving to the downside. Let's erase everything. Now, the market is moving to the downside, right? I say to you, what you need here is the market to break this. This is your confirmation of a higher high. Hence, you can see the market was going up. It was creating higher highs. Unfortunately, this higher low was broken. Can you see that? That's a sign that the market will continue to the downside now. That's a sign that the market will continue to the downside. What do? You just observe and do nothing. Okay, the market went down, no problem. The market then moves to the upside. As the market moves up, what do? Your job is to pay attention to this downtrend. What is it I have here that will cause the market to go up? Isn't it that many people were expecting the market to bounce on the break of structure here? Hence, you can tell by looking at the candlesticks here. This candlestick alone shows that the market went up, seller stepped in. This one went up, seller stepped in. This one went up, seller stepped in, and then the buyers took over. They went through. Why? It is because of so many people, they know that when the support is broken, it becomes what? It becomes the resistance. They were expecting the market to move to the downside immediately there. Unfortunately, if you don't have much experience in the market, you're not going to know that there's this person there that is just waiting patiently to sell. The market just went all the way up. 1 hour candlestick later on, the market pushed to the downside. What do you have? A continuation pattern. Or else, if you go to smaller time frame, you're going to get a break of structure. Let's move with the time frame. Let's move with the time frame and go to 30 minutes. But the break of structure is more visible on 15 minutes. Okay, still it is visible here. This is the setup that I always tell you to observe. Now, if you look at this, it's the same as this thing that I always talk about. Some you call it change of character. The market went up, it went down, it went higher, and then the market gave us something like this. Unfortunately, it went deeper. Later on, the market came back to test the break of structure. We are looking for sell opportunities. Whenever you're going to see something like this in your chart, you must know that we're going to push the market down. This is what we had here. Let me apply the line chart so that you can see. What is this? Can you see the movement? The market went down. It went back in. We're looking for our entries. Break of structure. The market couldn't create higher highs. Instead, the market changed the direction now. Your entry here as well. That's your entry. You go deeper to smaller time frames such as 15 minutes, you'll get more clue. This is 15 minutes. You always ask me, hey, can I trade on 15 minutes? Blah, blah, blah. This is what you get on 15 minutes. Now, I tell you again, As the market is going to be pushing up right now, you're going to have this one as your resistance, right? This continuation pattern contributed that the market reversing here immediately. This breaker structure contributed that the market reverse immediately. There's a supply and demand that was not tested there. Now you have a new resistance, of which is this one. On the right hand side, believe me, they will come for this resistance. Those who will step in here and sell this resistance, the market will go through and test this supply and demand, and then it moves to the downside. It's where you'll hear people saying, the market was creating stop hands and everything. The market was just coming for this one. That is why I always say it is important to go deeper with your analysis. Ungavesane decide ukuthi I feel like I have to sell. What are you selling? You need to understand what you are doing first so that you can take trades that will be corresponding with the direction of the market, right? Now we move again. We go back to 1 hour. We go back to 1 hour. On 1 hour, this is what we get. Let's assume that I couldn't identify the new direction of the market. What is it that I was supposed to do? Or what is it I had that was going to show me that the market's going to react like this or the market's going to move like this? Take your trend line. You use the trend line to determine the trend, not to buy or sell on this one. So here you can see the trend line has several touches, and then the trend line was broken here. Now, talking to those who like to jump in on a moving trend, I see there's a support there. The support was broken, supposed to be respected as a resistance there. I'm going to sell. You did not pay attention to this trend line. This trend line is pushing the market to the downside. They will then push the market all the way up towards to the trend line. What is it we have here? PCP. Hey, when that's not L. Now, with this, you know which they are higher the chance the market will go down. Those are looking forward, sell opportunities, sell opportunities, sell opportunities. They are higher the chance the market will go to the downside. They are higher the chance that the market will go to the downside. Also preparing and now you know, okay, fine. With this information, it means I must be looking for sell opportunities. We move again. Now, the market is going down. As the market is going down, what do you get? You get this as the second time touch of the trend line. Remember, the market is pushing to the downside. Those who are trading trend lines. This is just V75 showing you if you have this information that I always share with you, you will find yourself profitable every day because of I keep on showing you one and the same thing over and over and over again. Here is your trend line. First time, second time, the trend line was broken. They went down. They came back for the trend line, and then the market continues to the downside. Uyabona ukuthi now, if I show you this thing, kuba lula ukuthi when you approach the market, you go to the market with an understanding of what you are looking for. We move again. We look at the market on the bigger picture. Now, the market is coming down, right? What do we have? A breaker structure on our left-hand side. It's not even a breaker structure, sorry. It's just a support. It's just a support. The market came back for the support on the right-hand side. When now you're out there, you look at the downtrend, you're like, flip, it's a strong sell. I must be looking for sell opportunities. The market is just moving smoothly on an uptrend. What you do here, move to 30 minutes and look at the market structure. Look at the market structure. If you don't want to use these 30 minutes, go to 15, you'll get more clarity. Remember, the market was supposed to be creating lower lows, right? Now, the market gave you a trend line here, a small one, showing that, okay, fine, I'm failing to go down. Now, what do you have here? A break of structure. This is 15 minutes. The market went up. Here it went up. What do you have on your left-hand side? A break of structure again, but this one is a bit huge. Can you see that? The market went for the break of structure, came back down. There's a continuation pattern there as well. The market came back to the break of structure. It shows that the market's no longer going where it's no longer going down. In market see and you look forward, you look for buy opportunities. You erase again chart like clean, you look, oh okay, this is just a minor resistance there. This is 15 minutes. The market came back. As the market is pushing up, there's a continuation pattern. The market went higher, it came back for the continuation pattern. The advantage yokuthi u-approach i-market ngale ndlela ikubonisa almost everything that you need kuchart. It shows you everything that you need. Right now, what you can do to determine if the market is still moving to the upside, draw your trend line like this and just wait for the market to break it. Right now, they are here on this resistance level. At the same time, there's a continuation pattern there. The market tried to penetrate the trend line. Let's make the trend line a bit like this. They tried to penetrate the trend line. They failed. You move to the left-hand side to check what is it you have here, a continuation pattern. But this continuation pattern, is it corresponding with the direction of the market? No. What are they going to do here? They higher the chance that they can break above. Should it happen that they don't break above, wait for them to break the trend line, they will come back and test it, you enter a sell. Good deal. Sorry. The more you approach a market yakho with an understanding, it is the more everything becomes easier. But the more uzoya market yakho without the understanding of what you are doing, the more things are going to be hard for you. Let's go to higher time frame. I'll erase everything here and go to daily chart. I always tell you guys that you must use a higher time frame in most cases to see what is happening in your chart. Right now, this is what you get. As the market was going up, what happened? This continuation pattern contributed that the market must continue to the downside. It looks like this break of structure, the market went down. As it was going down, and move to smaller time frame of which is going to be 8 hours. On 8 hour, we have a clear view of what is happening right now in our chart. This is a clear view of what is currently happening. You can see here you have a trend line. The market is going for that trend line. Our job is to observe and see what the market's going to do there. That's your entry. I'm sorry, that's your touch of the trend line. That's the second touch of the trend line. It means somewhere the market's going to respect that trend line. Again, you have another trend line here that has two touches. It looks like this. This is 8 hour time frame. You have another trend line that looks like this. So now you have a plan of how to approach your volatility 75. You trade based on your plan. Right now, you can see here, they created a continuation pattern. The market closed below, right? They went back up. What is it you have? This is 8 hour, a continuation pattern. After testing the continuation pattern, the market went down. Now we move to 4 hour chart. We want something that we might get that will confirm the entry that we're supposed to get on the third touch of this trend line, right? We then move because there's nothing that we have or that we see right now. You then move to 2 hour. If you move to 2-hour, what you see, there's a continuation pattern already. It was tested here by this candlestick. A strong one went up. Let's then apply a line chart. You have a breaker structure here. Okay, move to 1 hour. Somewhere here we need to find something. And if there's nothing, that means we're going to respect that trend line. Again, I'll show you what to look for if we happen to get nothing. Because right now, if you look closer, this is what you have. Looking at this trend on 30 minutes. Continuation pattern. Currently on the continuation pattern as well. This is your resistance level. Chances of breaking higher, very high. All right, I erase these two. You move back to 4 hour. You are preparing for what is coming here. Should it happen that this trend line that I'm expecting the market to respect and then the market decide to go up, what should I do? Wait for the market to come back and test the breaker structure like this, and then you move up with the market. Now, once we reach the resistance level, move again and check what is it you have below. You'll get the breaker structure. The market will continue to the upside. A continuation pattern on your far left. Let me show you the continuation pattern. If I were to tell you with Uma trader V75, I want you mainly to focus on market structure. Market structure is the key for you to become profitable for V75 mostly. So here you can see market yako. It shows Uguti we are pushing to the upside. There's your breaker structure. If they break above, you know what they're going to do here. You know that after breaking this resistance, we're coming for the continuation pattern. This continuation pattern will create what? Will create a resistance level. The market will come down to the breaker structure. This is for our chart. Later on, they break above this new resistance. They come back down. Now, if you move to your left-hand side, where is the resistance? This is the resistance. Why am I keep on moving to the left-hand side? The left-hand side is what is controlling the right-hand side. So you can rely on the right-hand side without having the previous information. I need to go and react on based on what happened on the left-hand side. Market ichigela. Why market ichigela? It's because of the left-hand side. Faga is zone or move it to the right-hand side. This is where the market 10. The market 10 here, why? It's because of the left-hand side. You see now why it's important to rely on the left-hand side. Whatever that happens on the right-hand side, it comes as far as your left-hand side. You fail to understand this thing, in most cases, the market's going to be against you like nobody's business. Remember, you are patiently waiting here. Now, if the market will respect this resistance level, this trend line, I'm going to enter. And then if I enter, where am I going to exit? On this trend line. Should it happen that they will break below the trend line again, I smile. I'll get another entry. We'll move to the downside. Your entry again will be based on two things. Your entry will be based on the support that was broken. Your entry will be based on the trend line as well. That means the higher the chance the market will go to the downside. That means the higher the chance the market will go to the downside. So yonke into, you just prepare and wait for the outcome. You don't say, okay, fine. Right now, where the market is, let me erase these two things. Right now, where the market is, I see that the market is going up. As I see that the market is going up, I think I can buy. What are you buying? I can see that the market is coming down. I think I can sell. What are you selling? That's the main reason why today we have a high number of people who are not becoming profitable in the market because of they jump in for no reason. If there's no entry here for you, don't bother yourself to sell. Don't bother yourself to buy. This is for hour again. Take the trend line, this one, and push it all the way up. The trend line will be matching with what? With this broken trend line as well. That means the higher the chance the market will respect the above trend line because of the broken trend line below. Kodwa umsebenzi wakho yini is to wait for the market to react. Ungajumpi wena uthi ayazini, let me jump in because I feel like the market's gonna do this. Should it happen that the market moves against you, are you prepared? Right, manje, whatever we do, we need to be prepared. Sazi ukuthi okay, from here sibuya kanjani, from here sibuya kanjani, we are done. We are done. Let's go to volatility 50. Let me erase here. Let's go to volatility 50. This is what you do when you open your chart. You don't look for many things. Go to a higher time frame. The market yakho right now, it is approaching the support. As the market is approaching the support, you know what to do. You know what to look for. Already the market tested the support. Hence, you can see the market is just rejecting. You'll get more information as you're gonna be going to smaller time frame. This is your resistance level. You then look at the market then. Excuse me. Here, this is what I always talk about, guys. This is your breaker structure. See where the support is. This is daily chart. Umagu, you can see where the support is. This is your support. Your support was broken here. It was supposed to become a resistance. This is daily chart, but the market went through before it goes down. Those who don't have experience here, what is it that happened to them? The market went through their stop losses and then it went to their direction. But now, when I'm saying fundisi language, you can see that there's something there. Therefore, the market will move inside. This is your sell zone. This is your sell zone. Okay, fine. Let's move to 8-hour chart. I erase this one. Let's move to 8-hour chart. On 8-hour chart, you can see that the market reacted on what? Reacted on this support. As the market reacted on this support, now we want to know what's going to happen. And again, what's another thing that we're supposed to be asking ourselves? As we expect the market to go higher, right? What is it we have here that they left unattended? Remember, as the market was going down, we were relying on this uptrend, of which was this one. Now that we have nothing here left, we have to rely on this one. So our job is to check what is it we have here that was left unattended. You look closer, the market gave you a support here. Your support, this is 8-hour or 4-hour chart. The market gave you a support there. Your support was broken. Now, if you look closer, this is what I always tell you. No money is fine. But if you don't listen to what I tell you, you know what's going to happen to you, right? So I always say to you, pay attention to what happened. So here you got your support. It was broken, supposed to become a resistance here. So many people took entries here trying to push the market to the downside. The market went up. Some may even believe that the market was hunting their stop losses, blah, blah, blah. The market was coming for the continuation pattern. After testing the continuation pattern, the market went down. Can you see that? These are the things that you need to observe before you execute your entries based on the new direction of the market. Look closer and check what is it you have that was left unattended. All right, now you see, oh, okay, what do I have there? This resistance was tested twice. Resistant, resistant. If the market goes up, you're going to break this one and go for this resistant and come down. A continuation pattern is going to be created. We'll break above. Then when we come down, we'll respect the continuation pattern. These are the main reason why to trader support and resistance, but support and resistance it is because of our understanding ukuthi when the market leaves something behind, they will definitely come for it. They will definitely come for it. But now, umuzovula i-chart lakho, ufune lento efunwa uwe. Tell me, intando yakho ngeyenzeka la. Akekho okwazi ukucontrola i-Forex, but you can know ukuthi, okay, from here, this is what they're going to do based on what they did on their left-hand side. Left-hand side wakho uwona ozokutshela, okay, from here, this is how we're going to move. Let's go to 1 hour chart. This is our 1 hour chart. It looks like this. Now, if I tell you ukuthi market yakho i-communicator ngayo yonke angle, i-market yakho i-communicator ngayo yonke i-level, but it will be up to you ukuthi wena do you want to listen or not. So when I say i-market, whatever a shear behind is what they will use on the right-hand side. If we look closer here, the market gave us a what? A support. The market went down. As it is going up, it is going forward. What they left behind, a support that was broken, supposed to be tested as what? As resistant. The market goes down. It goes up, it comes down again. It goes higher, it breaks this resistance. It goes higher than that. What do we have? A support now. It means your resistance was broken, supposed to be tested as what? As support. The market comes down. What to expect here? The market to continue to the upside. Yabona manje so yakwazi ukuthi, oh, okay, i-market yami behave this way. This is what I must do. The market yami just move like this. From here, what should I do? Oh, okay. Now the market is going high. Where is the market gonna turn? You have a resistant level here. If you took your entry, that's your exit. And then the market went higher. Later on, it went down. Those who like to go to smaller time frame, you go to smaller time frame. Let's move to 15 minutes and look at what happened there. And if I tell you that market tech will just move based on its structure now and then, you see here, this is 15 minutes. We don't have much information. Let's check on 5 minutes, those who like to go to smaller time frame. And laphayana, if it were by me, entry mina bengengisayithatha laphayana because of we have several touches. But because of lento explain yona here, it is always available. Apply your line chart. You see this movement. It's the same thing I think Cheng Sion. The market will go up, come down, it goes higher, it breaks, it will go back and test. That's your entry. The market goes down. On which time frame? This is 5 minutes. People will just rush to go to smaller time frame to look for perfect entries. Now, this is where the danger is. You enter based on the market structure, stop loss going to be above. On a higher time frame, this is your resistance level. The market can penetrate and go up. When you went to smaller time frame to look for a perfect entry, the market goes up before it goes down. You see why Pile, and now you went hard here trying to kill the market. The market goes up, it goes down later. But that's equal up on it. So now you know, okay, from there, it shows that the market of ours, it is pushing to the downside. Let's assume that you happen to miss entries as well. The market goes down. This is something that I meant when I say the market will leave something on your left-hand side. They left a continuation pattern here. They came back and tested that continuation pattern. Can you see that? This is 5 minutes. Now, you go to another time frame such as 15 minutes. You have a continuation pattern and a breaker structure at the same time. Here's your resistance that was broken. Resistant, it was broken. Now, looking at this, hence I said, your left-hand side is your key for you to become profitable. If it wasn't for this continuation pattern and the breaker structure, what was going to happen on the right-hand side? So the continuation pattern caused the market to go all the way up. As the market was going up, look at the current trend. You have a minor breaker structure there and a continuation pattern at the same time. The market went down. Remember, the new trend shows that the market is pushing to the upside, to the downside. So now you know entries that you're going to be taking are corresponding with the direction of the market. Can you see that? Okay, as we are going down, the market decided to break this support. It went down. Some will be like, let's go for the breaker structure. We're going to kill the market goes up. They don't understand now what happened. My broker this, my broker that. Here is your broken trend line. Once they break a trend line, they'll come back and test it. You can use your trend line the same way you use support and resistance. Can you see that? Now, again, I once mentioned that it's a continuation pattern. It is also the reason why you'll get a support and resistance chart lag. You may not understand. Let's move to the left-hand side. What do you see here? A continuation pattern. Check what happened on the right-hand side. The market respected the continuation pattern only. It went all the way up. You see there's no breaker structure on my left-hand side. I just have a continuation pattern. This continuation pattern is pushing the market where? Back up. Where are we? Can you see how the market went up after testing the continuation pattern? And whereas the muscles as it is, yonke into yakho becomes easy and simple. I'll look over all over because of you don't understand what you are doing. You just know, okay, in this scenario, this is where I'm gonna take my entry. You go back to 1 hour chart. Let's just go to date instead of 1 hour. This is 30 minutes. The market left a continuation pattern there. It went down. This red candlestick went back to the continuation pattern. The market went down. They left a continuation pattern. They went all the way down. Here's another continuation pattern here. The market went down. You check what is it you have here, a break structure. The market went up. Yeah, Zochigala. And then it could be with the trend. You're out there. This is 30 minutes. I miss entries there. I want to find entries that are corresponding with the direction. No, it's simple. Here is your entry. You move with the direction of the market. All right, we continue. Remember, you don't use something that they did not present it to you. You use what is presented to your chart. Market Yako, it shows that we are pushing to the downside. Take your trend line and push it all the way down. Should they break this trend line, we are no longer pushing the market to the downside. Now you are done. You come back to the current price. What happened to the current price? Let's go back to 4 hour. Go 4 hour, which is sugar group on this support and needs. You go back to 30 minutes, you look at the market structure. Yazi mina ngifuna ukuthola ama-entries that are corresponding with the direction of the market. The market went high. Ezovala laphayana. It went back down. What do you get here? A break of structure. The market is supposed to come back and test the break of structure. Move to 15 minutes. Move to 15 minutes so that you can get a clue or a better understanding of what happened here. You then check, okay, here's my resistance. The market decided to break the resistance and go up. Why did the market turn here specific? The answer is on your left-hand side. On left-hand side wako is more like your mirrors when you are driving. You cannot drive peacefully without observing your mirrors. Therefore, you use your left-hand side. Now and then, you know how the market's going to move. Resistant, support, broken, resistant. Now the market's supposed to go down. No. Resistant here, it was broken. They're supposed to respect the resistance. Now the market decided to respect the resistance. It went up, it came back down, it went up to the resistance again. Now the market went down. Why did the market turn here? Check your left-hand side. Continuation pattern. The market went up. Now you check, the market came back down. Here. Where is the market now? We're breaking above. If the market goes up again, move to your left-hand side, resistant level. The market comes down again to the breaker structure. This is 15 minutes. We continue to the upside. We are done. The market is predictable only if you rely on your left-hand side. The market is just moving between support and resistance, support and resistance, support and resistance. We are done. Let me erase. Remember, on 4 hour, this is your support level. Look at the structure. Let's go to 30 minutes. This is your 30 minutes chart. Currently, we have a continuation pattern, but our continuation pattern is not yet fully formed. So already looking at that continuation pattern, I see the market will go up to the break of structure and the trend line as well. That's going to get the touch there. It will come down for the continuation pattern. Now we know what's going to happen. We break above. If we break above the trend line, that means you have your resistance that just go broken here. They will come back for the break of structure and go up. I'm jokingly, they're not going to go up. They will go for the trend line. They know that you'll be waiting here to do what? To buy. You'll step in here and buy. You'll buy here, expecting the market to move to the upside. You'll go to smaller time frame. You'll place your stop loss right below. Here is your entry on the trend line. They will push the market to the trend line. Excuse me. They will push the market to the trend line. Later on, they reverse. What happened to those who took entries there? What happened to those who took entries there? The market just went through their stop losses. Hey, the market was hunting my stop loss. Hey, the broker is manipulating me. As long as you don't want to learn, you'll keep on seeing the same thing over and over and over. The market will just show you flames over and over and over and over up until you realize where your mistake is. And again, let's say the market decides to break below. You'll still have another chance. Look at this. The chances are always there. Your job is to wait. Here is your trend line. It looks like this. If we are on 30 minutes, if they break below, they'll go back to the trend line and then they push the market to the downside. You enter, you move in the direction of the market. Remember, Bang and Bang, we don't force things go market. We let the market move. We let the market move the way it wants. You go to smaller time frame where I showed you the dead touch. not the third touch, man. The market respecting the continuation pattern there. You add your trend line like this. Those who are trading trend line, they got their interest as well. How? First time touch of the trend line, second time touch of the trend line, third touch, the market went up. Again, I said when the market created a resistance like this, my entry is going to be on the first time touch and the second time touch only. I'm not going to enter here and here. The level is getting weaker the more they touch it. Therefore, you won't find me here. Those who got my ebook, they know that. When I trade support and resistance, I take the first time touches and the 2 touches below. I'm done from there. Remember, kumarket ama oh ngento engihamayo. Bese kusakhoselanga ngikhuluma. Kumarket yonke into ebazokupresenta ngayo is what they will use when they come back. You need to text me to get the ebook, guys. Unfortunately, I'm creating okay, we'll come back to the tangaza ngihanywa yini. Kodwa kunento engihamayo. But okay, guys, and this is how you approach your market. Now, this is the beginning of the new week. Make sure Uguti, you go deeper with this information. You go and analyze. You go and look at the market structure. Approach the market the same way I did. Ayikho into enganikezanga yona. This is 8-hour chart. Ngimtshengisile ukuthi ama-trend lines asetshenziswa kanjani. I gave you everything, guys. I gave you everything ezokwenza ukuthi ube profitable kuchart. I gave you everything. I mean, check a break of structure. That thing will always be there on market. Look at what they did. They penetrated the support. They went up. Ngathini again, guys. I once said when you're out there trading support and resistance, pay attention to the touches. Let me extend this one to the right hand side. This is my support level. If you look closer on the support and where the trend lines meet the support, they penetrated the support. I said when you see something like this between the support and the resistance, you must know that they're going to break the support when they come back. I said when we trade support and resistance, we focus on what? On the touches. How many touches we got here? It's 1. There's no touch on your left hand side. This is the first time touch. The market came back for the second time touch. It went through a little bit and then it went up. I'm taking the first time and the second time. I'm not coming for the third touch because of on the third touch, they will break the level. I said to you again, when you trade support and resistance, you need to be careful. They know how you approach the support, how you approach the resistance. This is the main reason why today you have people who don't believe in support and resistance. Look at this. This is your resistance level. The market went down. As it was going up, they created a continuation pattern. They went high. They came back to this. The market closed above, right? That's your breakout structure. So many people were looking for entries to do what? To push the market up. The market went straight to their stop losses and respected the continuation pattern. Later on, the market went higher. Uyabona ukuthi uma so understand lezi zinto lezi, it becomes easier and simple for you as a trader to approach a market. The more wena uba hard ku-market, the more when ufuna i-market ibehave ngentando yakho, it is the more you'll just keep on losing, keep on losing, keep on losing because of i-market asikwazi ukuyicontrola bafethu. Instead, we have to use yonke into abasipresente ngayo kuma-chart wethu to our advantage. Then that's when we will find ourselves moving in the right direction. But manje mangizongena ku-market, I want to kill. How am I gonna do that? How am I gonna do that? Hey man, because now umungena chat like let's say here you see oh flip. The market yam gave us a resistant level here. As the market is near the resistant level, ibuya phansi izothatha amandla. The next thing the market goes up. As the market goes up, umsebenzi wami yini ukuyilinda ize ku-break structure ngithi now i-market yami iyabuya iza ku-break structure. Kusho ukuthi now I must look for my interest day. And ama-interest engiwathathayo will be based on what they presented to me. But now, if you are smart enough, you know that you can't enter here because of there's a support there. Your trade will not balance. I-risk management yakho izoma kanjani? You are out there, you are okay, which pattern or which strategy am I trading in the market? Or mina, I trade on my trend lines, okay? That means my entry is gonna be under the touch of that trend line. This is 8 hour. Uyalinda. Ungawari ukuthi uyothatha isikhathi esingakanani. Wara ngokuthi uzoye i-market izofika la uyidinga khona or else you'll find yourself blowing. Iyabuya laphayana. That's your entry. The market goes down. Where am I going to find my exit point? Move to your left-hand side. This is going to be your TP. Maybe you can say TP1 and then TP2. We are done. Yonke lento it is based on your left-hand side. Yonke lento it is based on your left-hand side. So I'm gonna close it here, Bafetu. So if you find this information interesting, please do not forget to like and subscribe as well.